You talked about small caps really coming back to life, and that really just happened this week. One of the things we were concerned with prior to this week's trading was really a divergence in the markets. You had at the March 23rd lows, really distinct leadership emerged from that point. It came in large cap, mega cap. It was concentrated in technology, obviously in healthcare and select consumer. And what had happened in the ensuing weeks, most of the money flow, or a good chunk of the money flow, was really concentrated in those few areas. And just a couple of days ago, we saw breadth and participation really improve significantly. And that pushed up the small cap 600, as you said. You also look at the Russell 2000, the mid cap 400, even the NYSE composite, which is close to 1,900 stocks. These have all now made 50% retracements of the entire crash. And I think that sets us up pretty well for the short run. I think what we're seeing in terms of it's not necessarily new leadership emerging, but new groups participating. We're seeing industrials, transports. We've seen the banks rally upwards of 13, 14, even 15% over the last 2 days. The fact that breadth and participation is starting to increase, I think that pushes us up over the short run. Now, in the coming months and before year end, we still are of the opinion that you could see larger pullbacks ahead. We think you could see some return to volatility. Our stance is that the lows of this market cycle, this correction cycle, are in. They were the pivot point around March 23rd. That was around 2,200 on the S&P. But you could see corrections bigger than we've seen thus far. We would look for 8 to 10% pullbacks in the months ahead. We would be buyers on those most likely.
Okay, but pullbacks could come because here's the thing, Dan. I mean, even if you're among the most optimistic that we have heard on CNBC with the V-shaped recovery, I think JP Morgan came out with their best case scenario yesterday. Nobody that I have heard is predicting us going back to 3 or 4% unemployment, even best case. But the market seems to be acting as if we're going back to a kind of normal. I mean, nobody I'm hearing is talking about that even a year out. What do you see in the long run for equities? Because there is still a lot of economic pain to come, no doubt, even if we start to reopen in the next couple of weeks and months.
Yeah, I agree 100%, and that's why we are factoring in bigger corrections ahead, anywhere from 8 to 10%. I think what's going on here is a disconnect between the markets and reality. And again, remember, markets are usually somewhat disconnected from reality. They trade on sentiment and perception of future events. But right now, specifically, massive amounts of liquidity are flooding into the system. We know what the Fed has done with its balance sheet. We know the fiscal stimulus, or I should say fiscal relief measures that have been enacted. There's most likely more to come because, as you say, the economy continues to slow, and I think the economic data is going to get worse. So what they've done is create a playbook off of the 08-09 crash, and that's to flood the system with liquidity. This is really creating a stopgap and is keeping the market stabilized. So I believe this is going to continue to stabilize the markets as that economic data comes in worse. It's going to lead to more volatility. Again, our opinion is a bottom has been formed, the lows are in. Beyond that, as the economy slowly starts to come back online, and I agree with you, it's going to take years. We think the amount of liquidity is simply too much relative to valuation, relative to our demographic profile here in the U.S. We think the secular bull market ultimately resumes in the next couple of years or so. There's a big picture underneath the story here. Liquidity, I think, is a driving force.